Okay, so for our next speaker, we'll be changing things up and I'll be moderating a fireside chat with Gary Brown, CFO of Wheaton Precious Metals. Wheaton is one of the world's largest precious metal streaming companies, offering investors cost predictability, direct leverage to increasing precious metal prices, and a high-quality asset base. Gary.
Did you like us? Gary.
Okay, Gary, thank you very much for being here with us. So before we start, can you just give the audience like a 2 to 3 minute download about Wheaton, your business, and your approach?
Sure. Thanks for having me. So Wheaton is the company that invented the metal streaming business, and we are currently the largest metal streaming company out there. We are celebrating our 20th anniversary this year, and over those 20 years we have amassed what we would consider the highest quality portfolio of streams out there. So we've got interest in 45 different mines. 18 of those are currently operating, and the remainder are at various stages of development, which fuel our industry-leading growth profile over the next 5 years. Yeah, we're very precious metal focused, so 99% of our revenues in 2023 were derived from precious metal sales, and we will continue to be focused on layering in additional precious metal streams. The assets that we have interest in are very long life and low cost assets. So the average reserve life of our assets are 28 years, and then if you layer on resources on top of that, it more than doubles. So we estimate that our effective mine life averages over 60 years, and then about 93% of our production comes from mines that operate in the lowest half of their respective cost quartiles. So that means that these mines should be economic in virtually any type of commodity price environment. And the market right now is very robust for streaming opportunities. So we expect to be layering in additional accretive transactions in the near term.
Well, that's amazing. So 45 assets, some of the best ones in the world, and you guys just haven't just rested on those assets. Over the last year, you guys have been extremely active. Can you talk about some of the deals you've done in the last year and why you did them?
Sure. Yeah, 2023 was a bit of a record year for us in the number of transactions that we consummated. We did 8 deals, committing over $1 billion of capital, which will add 80 to 90,000 gold equivalent ounces to our growth profile. And we're going from about 585,000 gold equivalent ounces this year to over 800,000 gold equivalent ounces in production in 2028. So very, very strong growth profile. The two biggest assets that we acquired in 2023 were Ivan Plat's Platreef. We are deriving gold, platinum, and palladium flows from that asset that will generate, when it ramps up, 35 to 40,000 gold equivalent ounces of production for us, and that was about 412 million of the $1.8 billion that we committed. And the other big one was Lumina Gold's Cangrejos project that is looks very, very promising. And we've committed $300 million to that project. We'll pay about $40 million prior to them moving into construction, but when that gets built, that should generate 25 to 30,000 gold equivalent ounces of production to us. So we're very excited about that.
Yeah, two great assets you just added to your portfolio. Do you guys think this growth will continue? How are you seeing the M&A market right now?
As I said, it's very robust. You've got interest rates on debt that make debt much more difficult to service, and also lenders are being much more selective as to who they're extending credit to. So, debt isn't largely available. The equity markets are, look like they're coming back, and I think that's a good thing. But for the last few years, streaming capital has really been the only form of capital available to the junior mining space, and we were very happy to play a role in providing them with capital, which fuels our growth story. And looking forward, we have over a dozen opportunities that we're pursuing right now. And we feel pretty good about our chances of consummating some of those.
Oh, very good. Well, we look forward to seeing that. And as an investment banker, I'm glad that our equity markets have started to come back here. So as you think about both your asset base and some of these acquisitions, how do you guys think about jurisdictional risk? Because obviously that's come to the forefront in the last year or two here.
Yeah, I mean, we build that into the discount rates that we require, and we use the spread between local country bonds and U.S. Treasuries as an indicator of how much that premium needs to be. That being said, the way we structure our deals, we generally don't have any direct connection to the country, and so we're quite insulated from political risks in general. That being said, we're focused on political risk associated with the jurisdiction in which the mine operates, and currently our political risk profile is very, very low, and we can intend to maintain that.
Yeah, you guys do have great assets in great countries. So we talked about the growth side. Obviously, commodity prices are at great levels, and you guys are generating tremendous free cash flow right now. How do you guys balance return of capital versus spending on growth?
Yeah, it's always a challenge, but we think that we're striking the right balance. We do pay a dividend. We now pay 62 cents a share per year, which amounts to roughly 30% of our cash flows. So we're generating about $1 billion of operating cash flow annually at current commodity prices, a little bit more at current prices actually. So we're dividending out about $300 million a year. We believe we'll find a home for the 700 that we're retaining, and as I hopefully have explained, the opportunity set is vast right now. And on top of that, we do have over $2 billion of outstanding commitments that we need to fund over the next 3 to 5 years. So we have to keep that in mind. We are debt free, and we ended Q1 with over $300 million of cash on hand. We don't actually, without any new transactions, we don't anticipate even having to draw on our revolver to fund those $2 billion of outstanding commitments. So we view ourselves as having more than $2 billion of firepower currently to consummate new transactions. And on the dividend front, our expectation is that we will try to modestly increase that annually.
Well, that's fantastic. Yeah, you guys are generating really strong cash flow right now, and being debt free in this market, having the cash on hand, the firepower in this market to consummate deals is an enviable spot. Now, one of the unique aspects that the audience might not appreciate is Wheaton in its prior day was silver Wheaton. You guys have done some gold deals, and now you're Wheaton Precious, but silver is still a key part of your portfolio. Obviously, silver right now is having a moment. Back at $30, we haven't seen this level in 10, 15 years. What excites you about the silver market right now?
Might be shorter answer to tell you what doesn't excite me about silver. Look, silver represents about 35% of our portfolio right now, and it actually grows a little bit over the next 5 years. Just the supply-demand fundamentals for silver from an industrial application are very strong, with very significant growth coming from the solar panel demand, as well as automotive applications of silver. With that, the industry is expecting to be in a deficit for silver from an industrial application perspective for the next decade. So that bodes very well. When you look at it from a precious metal demand perspective, if you look back over the last 200 years, about 10 times more silver is produced every year than gold. Right now, 60% of that silver is being consumed through industrial application, which leaves less than half of that silver available for precious metal demand. So, I don't suggest that we're going to get to a 5-to-1 gold silver pricing ratio, but we're at 80-to-1 now. We got to 25-to-1 in the last rally, and I suspect there's a long way to go between 80 and 25, and so I'm very bullish on gold. But I'm more bullish on silver.
Yeah, I think the last time silver was at this level, we were probably $1,200-$1,300 gold.
Yeah, that's right.
So it feels like there's a lot of runway here, and you guys are well positioned for that. So one final question here. So we have a lot of people in the audience here. Why should someone sit in the audience right now? Why should they go and buy Wheaton? I think if you're looking for precious metal exposure, in my opinion, and obviously I'm biased, there's really no better way to get that precious metal exposure than through an investment in Wheaton Precious Metals. If you look at our track record over the last 20 years, we've put more than $10 billion into streams. We've already recovered that amount in cash flow. Those assets continue to have over a 28-year reserve life, and when you layer in resources, that takes the effective life to more than 60 years. We're generating $1 billion plus of operating cash flow today, and that grows by over 40% over the next 5 years, just with the deals that we've done. We dividend out about 30% of our operating cash flow to shareholders, and when you put that all together, when you look back over the 20 years that we've been around, we've generated a 17% average return on the $10 billion that we've invested to date, and that's an annual after-tax return over 20 years. I would challenge people out here to find a portfolio manager that's been able to generate those types of returns. And the same team that built the company is the team that's in place today. I've been with the company for over 16 years now, and many of the other people in the company have been there for over 10. So, and you look at the G&A costs that we've got, and it amounts to about 20 basis points annually, which is a lot less than you're going to pay an ETF fund manager to basically just store your gold for you. We're out there doing deals that are accretive to our shareholders, and as I have hopefully conveyed, there's a lot of opportunity on that front. And if you look at the returns that we've generated over the last 20 years and compare that to the returns of investing in gold or silver directly,
or investing in gold or silver mining companies. We have beat the returns on all of those fronts by a significant margin over any investment horizon that you look at. So that's why I think you should invest in Wheaton.
And that was a compelling case there, Gary. Well, that's all the time we have for today. So Gary, thank you very much for doing this. Big round of applause for Gary.
Thanks, John.
Cheers.
It's awesome.